Morning everyone, Sergey is here, and today we are going to look into bank reconciliation process. As an accountant, as part of your day-to-day duties, you might be recording cash receipts and cash disbursements when you pay someone or when you receive payment from someone. And usually all that activity is reflected into your books. Sometimes you will pay with cash and you receive cash. Sometimes you will pay with a check which will not be cashed timely by a customer, and it will just sit in your book as a check outstanding until it clears. And as a result of bank account and checks, you will get a net cash in your books. However, at the month's end, you need to perform a reconciliation between your bank statement and your books. So you get a bank statement here and you get your books here, and you see that these balances doesn't match. So you need to figure out what happened so the balances doesn't match. And in this template I provided most of the situations which can happen, which can impact the differences between your bank and your books. So your books is what you have in your spreadsheet or in a QuickBooks, and what does QuickBooks say about your cash. So in our case, we see that we have like a net cash of 4,000, including checks outstanding. And in our bank statement, we see this is, so I completely made it up. So it's an imaginary bank statement, and the period matches, and we see that we have a bunch of, we have some transactions which we have already reflected in our books during the months, and we have a bunch of other transactions. We will go one by one and we will discuss what's the substance of these transactions. But before we do a reconciliation for this month, we need to look at 1 month before and make sure that everything matches. Make sure that your opening balance is reconciled. If not, you need to go reconcile prior periods or seek professional help in case you're a small business and doing your own books and you understand that everything is so messed up that you cannot figure it out. You probably want to hire a bookkeeper to do a cleanup job. But okay, let's move on. So let's see, in prior month's end we just had 4,000 cash in our account, and we had 5,000. Sorry. Let's just assume that prior months was reconciled. So it was also 5,000. So we just assume that it is reconciled, and for the sake of this exercise. And in real life, we need to know that for certain, because we will not be, if previous months is not reconciled and there is a difference, even if we reconcile everything this month, we will still see that difference, and it can end up in many wasted hours before we figure out that it is something from the previous month. Okay, so that's kind of a standard template for bank reconciliation. It can be presented a bit differently, and let's start with the bank. We have some unadjusted balance which we took directly from the bank statement, ending balance. Now we know that we deposited cash at the last day of the month, and we know that our bank, it takes some time for our bank to process and post it, so the cash might be reflected in the next month. On a bank statement, there might be something like a pending activity, or in some online bank report, or maybe you will have to take it from the next month. So, for example, if it's September 30, 2021, and we deposited 500 cash that day, and we reflected that cash in the books. So when we get cash or checks or payments, we need to reflect them in the book first. Then we deposit it to the bank account. So if we got cash on September 30, we reflect it in the books in September, we bring it to bank, but bank hasn't reflected it in the books until October. But so this is our true cash at the year end, at the month end, sorry. And that's why this is a reconciling item here in the bank. Then we might have been paying some expenses with checks which our counterparties haven't deposited yet into our bank account. In that situation, we reconcile, in that template, we reconcile net cash. So it's cash in the bank less your checks outstanding. So we assume that paying something with a check is equal to paying something with a cash. Sometimes bigger companies, they have separate accounts for cash and checks outstanding, and they might have two reconciliations: separate reconciliation for checks and separate reconciliation for the bank statement. So separate for cash, separate for checks. Okay, when you download your statement, you might want to look through it, and you might find some bank errors. For example, they may deduct some commissions which they shouldn't have deducted, or they might deposit something to your account. For example, if you know you deposited $500 cash and they made an error and deposited $600. It's rarely happens, but it can happen. Or if you deposited a check for 500 and for some reason, due to some glitch, they reflected it as a 600. So you might want to notify your bank and correct these errors. So if error is in your favor, so bank deposited more cash than you brought to the bank, your ending balance in the bank is kind of overstated, and you need to deduct that error from your cash balance. So these errors, they are obviously not reflected in your books. So you find errors in your favor and you find errors not in your favor, and here you correct for that. So you, from bank statement, you deduct errors in your favor, you add back errors not in your favor, and of course you need to notify your bank to fix those errors. And you come up with some bank adjusted balance. So far, you do not make any entries in your books in respect of these items. So you do not reflect extra income from the error in your favor, and you do not reflect expense due to bank error not in your favor. Because if you do that, you might totally forgot that you had these items in the past and you will never correct them. So you might have some risks. If it's not in your favor, you might just losing profits. If it's in your favor, sometime in the future bank may find it out. Not really, there will be some consequences if it's a small amount, but your accounting ethics should tell you that you need to fix that as well. Now let's take a look into our books. On a daily basis, we usually check with our bank account what's money coming in, what's money going out, or we know when customers pay us, we got checks and we go deposit the checks. When we do that during the months, we usually make accounting entries. But there is a list of entries which we might have missed because we do not check our bank account too often, Or some of these entries are usually booked closer to the month's end when we are busy with something else, and we just need to catch up and book those entries. Let's see, you can usually find the amount on your bank statement. For example, this one, transaction reflected on your books, so that's already reflected. We could have matched it with bank statement. There might be a list of many transactions, and if we want to, we can match. If our reconciliation doesn't work, we at the end we probably need to match those transactions. Okay, bank interest earned and deposited this month, 100. So that's your money. You should have booked those money, and it's here. You add it to your books. Okay, and that will be debit cash, credit interest income. Or if you make an accrual for the interest, if you kind of recognize the income and record it as a receivable, you make debit cash, credit interest receivable. A similar situation, if something is deposited to your bank automatically, if some vendors pay you like a subscription fee or something like that, and you missed that electronic payment to your bank when you were doing your month's routine entries, you need to reflect that. And again, it will be debit cash, credit income, or credit accounts receivable. I would assume that would be accounts receivable if that's a revenue, because you need to accrue for the revenue when you sell. When you sell and send invoice to the customer. In QuickBooks, it's invoicing. It's done through invoicing. If it's a prepayment, you might just record debit cash, credit, prepayment receipt. Okay, bank fees. Usually bank charges fees somewhere in the middle of the month in order not to overcomplicate your month-end close, but sometimes you can notice it only closer to the month end. It will be listed on your statement, bank fees and any check related costs like a check issuance cost or something like that, various types of commissions. That might be one line analysis fee or something like that, or it might be several separate lines. So you record credit cash, debit bank fees, credit cash, debit bank fees. Bank fees, it's an expense account. Similarly to deposits, when you do auto payments or some vendor has a right to deduct amount from your bank account. For example, it can be done by utility companies like power companies, or maybe some railroads if you're a big company, or some insurance providers. They just deduct it, and you probably get like email notification for that, but you might not have that one. So if you find out that something was deducted from your account and it is a legit deduction, not a bank error, you go ahead and adjust your book. You make an entry. Then what might happen, a bad surprise might happen, is when you got a check payment from customer, recorded an income and debited cash to your cash in the books, and you deposited the check to your bank. And then within like a week, your banks find out that the customer banks will not honor that check. So the check basically bounces and it is not deposited to your bank, and you need to correct your cash accounts in the book. So when you got that check, when you got the check itself, you recognize debit cash, credit accounts receivable, or credit revenue. If the check bounces, you need to reduce your cash, so you credit cash and you debit accounts receivable back, and you try to reach out to your customer and to demand the payment back, to demand to resend you check or pay cash, or you maybe want to go to the court if they are going bankrupt. You might want to go to the court and try to recover that payment. Other than that, you might have some book errors. So if you do this part and account doesn't reconcile, you probably need to go in your books day by day and transaction by transaction and find out if you have any kind of errors in the book. For example, an example error might be when you received an invoice from a vendor, from supplier, and recorded this as a check to your cash account. It's very suspicious error, might be sign of some fraud, but anyway, errors happen. So someone debited cash instead of credited cash, and that will be like a double error in your books. Or for example, someone recorded a check deposit 2 times. So they received the checks on day 1, they recorded a deposit of the check on day 1, but they decided to go to the bank on day 2 and they already forgotten that they recorded the check. So they recorded the check twice and deposited it only once. So that's an error in the book, and it also needs to be corrected. Okay, so when we do all of that, we see that our balances matches. For my course, I will update that template a bit with more examples. But so far, I think we got a good understanding on how to reconcile bank and books. A bit caution about checks. Sometimes banks have that balance, so sometimes you can figure out what your checks outstanding are in the bank. That's when you upload some data related to checks issued to your bank. Many small businesses doesn't do that, so they just have a paper checkbooks and they write the checks, and bank actually doesn't know what your check balance is, so you need to track that separately. You need to be very accurate with checks. And some companies, like I shown here, they might have two separate accounts on the trial balance, one for the cash in the bank and one for the checks outstanding. So I hope that was a good learning today. We will meet tomorrow on the Q&A for the previous module. You can find all the details for the module in the links below that video. Also, please subscribe to the channel and follow and keep notifications up to get more and more accounting knowledge. Thank you and have a great day.